Impact investments are investments made in funds or organizations or companies that have the intent of creating a social or environmental impact alongside financial returns. For example, a group of investors have given money to Root Capital, which just reached a milestone of $100 million under management. And what they do is they take those funds and they invest them in small farmers and agricultural projects in the developing world. The return that those investors get, financial return, somewhat smaller than what a commercial return might be, but they're also having a dramatic impact on these individuals and the communities and the agricultural outputs. Some people think impact investing is synonymous with philanthropy, but it's not. Impact investing actually represents a wide range of investments. On the one hand, you have what some may deem more philanthropic impact investing, where the investor might be interested in just sort of recouping their initial investment, but not in making a return. So from that end of the spectrum, all the way to the other end of the spectrum, where people are looking for competitive financial returns. And there certainly is a middle ground. Many impact investors are willing to accept perhaps somewhat lower financial returns if it means that they are getting a significant social and environmental impact. In 2013, there were $46 billion in impact investments under management. That was a 20% increase from the year before in 2012. Even if that $400 billion number is a bit on the high side, it's clear that the current investment is falling short of the potential. One of the things that's often discussed is the lack of a pipeline of investments, that there are not enough social enterprises and businesses that are ready to accept these types of investments. Maybe it's because of a lack of mentorship or education or business plans, a lack of credit history on behalf of those companies. Another challenge is that many investors, and certainly institutional investors, which present a largely untapped market for impact investing, require a history of financial success. And impact investing is still a fairly young market, so there are not a lot of funds and investment vehicles that have that history that's necessary. Some in impact investing would actually argue that there are investable companies out there, but the challenge is putting those deals together. That there's not enough people working at that intersection of connecting the people who need the finance with the people who can provide it. So that's another space where the industry can really work to put in place some of these people and companies that can really serve as connectors. There are certainly also some policy barriers. There are regulations here in the US that, if adapted, could open up more potential investors and allow them to invest in impact investments. Certainly there are other regulations in other countries which can also have similar positive impacts. We know at this point that official development assistance is not going to fulfill the incredible financing needs of the future global development goals. So impact investments and other innovative finance have a critical role to play. Exactly how that will unfold, we still don't know. But what is key is ensuring that development is done in a results-oriented way, in a way where impact is measured, and so that financing can come behind that, and investors can be paid for that social or environmental return.